Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be discussing another illustration which will be related to the second problem of account current itself, or rather the account method's second problem. So when we're talking about the second method, the first method was when we had to figure out the specification which is related to maintaining or making of account current, which is the first one being the interest method. The second one will be the product method. Now this method is a little different as compared to the previous one. However, the columns remain the same. The only difference in those columns is that the interest column is replaced by the column named as product. Now what this product has is something that will be explaining it to you. So let's note down the consistent details of it, or rather the content of these product, or rather this method, on the sheet, and let's figure out how to go about with this specific illustration. Now there are certain prerequisites of this specific method that has been mentioned. There are certain steps that are mentioned here which has to be followed as compared to the previous method that we have learned, which is the interest method. Now let's go through the prerequisites first. Now the requisites are: the interest column is replaced by the product column. Rest all columns remain the same. Now the product column calculation is done in a specific manner. Now how to find out the product column total, or rather the product column item, is that the amount which is due multiplied by the number of days. The number of days calculation still remains the same. Now once this is done, while tallying the account current, you have to mention all these remaining steps that will be highlighting them. So the first thing is that you will be finding the balance of the product column. That means debit side product column and credit side product column will be tallied together, and we'll see which side has the balance. That means if debit side is greater than the credit side, or the credit side is greater than the debit side, accordingly the balance will be mentioned there. After that, on this balance, whatever has been calculated, on this balance that has been calculated, we'll be calculating the interest at the given rate. It may be 10%, 12%, 6%, 5%, whatever rate of interest is given. We'll be calculating the interest for one day itself, for one day on that product balance. So if the credit side is greater than the debit side, the balance will be mentioned on the debit side. That balance, on that specific balance itself, will be calculating the interest. If it is for 10%, 10% on that amount for one day, how much is the interest, that will be calculated. Now whatever interest has been calculated right now, it will be then mentioned on the opposite side of where the balance has been mentioned. So if the product balance has been mentioned on the debit side, this interest will be mentioned on the credit side of the amount column. Similarly, if this has been mentioned on the credit side, interest will be mentioned on the debit side of the amount column. That will mark the closure of any specific sum under this product method. So I hope it is clear for you how to go ahead with the steps. Now what we'll be doing is that we'll be taking the similar sum that we have done in the previous illustration, which is for interest method, that is Sham and Nath brothers, and we'll be using the same kind of calculation, just so that you are able to understand how this amount came in and how the calculations are going through. So let's start with the illustration. We'll note down the illustration first. So the question here has been mentioned, and now we have to go ahead and figure out what the question exactly has been mentioned. So this is the same ideal question that we have decided earlier, that is where we have to prepare the account current for Mr. Nath brothers, and which is handled by Sham. Now the data has been given for 2015 and 2016 along with the particulars and the due date on it. So for 2015 we have certain transactions, almost around 8. We know about those transactions. Let's read it out for them. September 16, goods were sold to Sham amounting to rupees 200, and the due date has been mentioned here, which is 1st of October. On 1st of October, cash received from Sham for rupees 90. Wherever there is a receipt of payment, there is no due date that has been mentioned. We'll consider that same transaction date to be the due date here. Similarly, on October 21st, goods were purchased from Sham amounting to rupees 500, and the due date was 1st of December. November 1, we paid certain amount to Sham. 330, again here the due date hasn't been mentioned, so it will be 1st of November as the due date. Similarly, for December 1st, we paid certain amount to Sham, that is 300 330 rupees again. On December 5th, we purchased certain goods from Sham amounting to rupees 500 and the due date was 1st of Jan. Again on December 10th, we purchased certain goods from Sham which was for an amount of 200 and the due date was 1st of Jan again. Now for the year 2016, on 1st of Jan, we paid certain amount to Sham which is 600 rupees, and again on 9th of Jan, we paid certain amount, and that was for goods being sold to Sham. So that means certain amount of goods was sold out to Sham and we received an amount of 20 on it, the due date being 1st of Feb. So this is the question. First of all, this is not the answer, this is the question that we have mentioned here, and now we'll be going ahead with the calculation of due days, or rather we can go ahead with the calculation of total number of days. That will be the part of the illustration. So let's go ahead and prepare the working note first. Now the start of the working note will be from the transaction days that we have mentioned in the question. I hope you have referred down the question and you have noted it. So let's start with the working note on this. For the year 2015, we'll be mentioning the transaction date. Wherever the due date is available, we'll be using that due date itself. However, if the due date is not available, then in such a scenario, we'll be taking the transaction date itself as the due date, and according to that, for the closing year, which is 1st of Feb for this specific question, that means years are closing for 1st of Feb, and that until that date rather we'll be talking about. So from the due date until that specific date, how many number of days are supposed to be calculated will be calculated on that basis. Here the question has the start month as October and ends at February, hence we have taken October, November, December, Jan and Feb. The calculation will be for these 5 months. So let's go ahead and figure it out. So the first transaction was on September 16th. The due date for this transaction was also mentioned. Let's mention it down here. So now to calculate the total number of days, we'll exclude 1st of October, only that specific day, and other days of October will be taken into consideration. That will be like 30th days, or rather we can say 30 days for the month of October, because in the month of October you have 31 days, out of which if 1st of October is taken off or removed, only tends to be removed as, or rather we can say that only that day has to be removed, then 30 days are pending in the month of October. Accordingly, we have to calculate it for the month of November, December, Jan and Feb, and the total of all these numericals will give you the total number of days here. For the month of Feb, we have taken only one day because that's the closing day here. Hence, now we'll be taking the total of all number of days. Now we'll go on the second transaction and we'll do the same thing that we have done for the first transaction. Now the second transaction refers to the cash that was received from Sham, and that has been mentioned here. The amount has been also mentioned in the question. However, the amount is no concern for us because we're only calculating total number of days as of now. So October 1st was the transaction date. No due date has been mentioned. Hence, that same transaction date will be calculated as the due date here. Hence, we'll follow the same structure now. Now, as you know that if I understood first thing whether the due date has been given, how to do the calculation, whether the due date hasn't been given, then how to get the calculation done. Similarly, we'll do it for all the other transactions. Let's do it out and then we'll figure out how many total number of days have been figured for each and every transaction. So here we are done with the calculation of total number of days for all these transactions. The next step is to go ahead and prepare the format for the actual sum. So this is the working note that we have completed, and the total days that we have figured out in the last column, that will be used to calculate the total number of product. Rather, this will be one of the important thing to calculate the product and the amount that has been already mentioned there. So let's figure out how to go ahead and prepare that data first. So we have prepared the format for your reference. The columns remain the same, only the interest column has been changed by product now. And if you can see under that product, we have mentioned a formula A into B. That means A refers to the amount column and B refers to the date column. So to find out the product, you have to multiply every amount by the corresponding days. That means total days that we have calculated in the working note. So let's start with the posting of journal entries now. Now the first transaction refers to goods being sold out. So let's start with that. So when your goods are sold out to Sham, accordingly you have to make the transactions. So it will be Sham account debit to sales account. So within Sham account, or rather this account is handled by Sham. So it will be like Sham account debit to sales account. On the debit side of this account current, we'll mention sales. So let's mention that part. So we've mentioned the date of the transaction. to sales account has been also mentioned, the due date has been mentioned, and the amount and the total number of days also has been mentioned, that is 200 and 123. Now the product refers to 200 multiplied by 123, that will be your product answer. So this is how you figure out the product, that is A multiplied by B here. In the same manner, you will go ahead and post every other transaction and every other detail with the product column being mentioned in it. So let's go ahead and figure out the product column, and in between we'll discuss about these transactions as well. So let's complete it for 2015 first. Now the next transaction refers to cash received from Sham, 90 rupees. Now in such a transaction, you're receiving cash, that means bank account debit to Sham account. So on the credit side of this account, rather wherever is Sham, that you can consider to be the account current option, or rather that is the account current credit side. So wherever, if the Sham's account is debited or if Sham account is credited, according to that you can mention that account current is debited or account current is credited. So that's how you use the logic here while mentioning the transaction details. So here, to cash account or rather by bank account or by cash account will be mentioned here on the credit side, and the amount and the total number of days that we calculated will be mentioned, and the due date will be the same transactional date because no due date was mentioned earlier. I hope these transactions are giving you idea about how to go ahead with the product column transaction and how to post these transactions in the first place. Now that we know about all those transactions that has a due date as well that doesn't have a due date, let's go ahead and figure it out for the whole 2015 year now. So we have completed the transaction for 2015 as well, for 2016 as well. Now, as per the instructions that were given earlier, that means the remaining steps that we have to calculate. So we'll first figure out the product balances, that means the total of the product side, whether we have on the credit side total, whether we have on the debit side total, and accordingly we'll place it, and on that product balance itself we'll be calculating interest here. Now if you look at the product table itself, the debit side is bringing you a total of 94,020, which is approximately higher as compared to the credit side because the entries are also low for a product total and the sum also looks a little less. So we'll take debit side total as 94,020 being the tallied amount. That means credit side will have certain balance. So if you can see, the balance of the product is 30,250, which is on the credit side. That means whatever interest has to be mentioned will be mentioned on the debit side here. So in this method, 30,250 is the product balance. On this amount, we'll be calculating interest at the rate of 6% because that has been mentioned in the question. So interest at the rate of 6% will be calculated per annum for 1 day itself. Now let's calculate how much is the interest for 1 day. So if we calculate the interest on the product balance of 30,250 for 6%, it comes as 1,815. That means 1815 for the year. If we divide it by 365 days, because that has also been mentioned in the question, 1 year equals to 365 days. So that has been also mentioned in the question, that is 1 year is equal to 365 days. Accordingly, for 1 day, how much is the amount? For 1 month, or rather when we can talk about for 12 months, it is 1815 divided by 365, we will get it for 1 day. That comes around 4.97. Now this amount of 4.97 will be mentioned on the opposite side of where the balance is. Now here the balance has been mentioned on the credit side, so on the debit side of the amount column will mention this balance. Now once this has been done, post this will be going ahead and figuring out the balance of the amount column. That means whether we have a debit balance or whether we have a credit balance. Let's close it. So the balance on the credit side is 194 rupees and 97 paise. That will be carried forward in the next month, or rather in the next date. So this marks the closure of this specific sum. We have analyzed how the product calculation has to be done. We have analyzed how to go ahead with the calculation of total days, and then we have mentioned the same in the working note, and we have formatted the actual illustration of how the product column is supposed to be made. Exactly after that, we have mentioned that the balances of the product has to be first finalized. Based on that amount itself, we'll be able to calculate the rate of interest, or rather the interest for 1 day, and that will be settling amount for the amount column, post which will be mentioning whether the amount column has a debit balance or a credit balance, and that will be carried forward in the next month. So I hope this video gave you a clarity about a lot of on the product method. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.